Many beginner traders start off buying penny stocks due to the potential of uncovering the next Tesla or Apple. But in reality, what these traders are really buying is hope. Hey traders, Mike Sur here. I started trading penny stocks in 1999 at the beginning of my trading career, mainly because I didn't have a lot of money at that time and I wanted to make a lot of money. While I had some initial success, I just didn't understand how to play them. And I lost my fair share of money playing them. However, things turned around when I figured out the game of playing penny stocks. So in this video, I'm going to share with you my experiences and help you become a successful penny stock trader. Let's get started. Many of you have probably watched the movie The Wolf of Wall Street. It's based on the true life story of Jordan Belfort, from his rise to becoming a wealthy stockbroker and the fall due to corruption and crime in the dirty penny stock world. The movie centers around Jordan running his own stock brokerage firm, Stratton Oakmont, with his cult-like band of brokers and making a huge fortune by selling worthless penny stocks to unsuspecting investors. Another similar movie is Boiler Room, which revolves around hyper-aggressive young stock jocks at a fly-by-night brokerage firm doing the exact same thing, peddling penny stocks to naive buyers over the phone. Now, while these two movies are entertaining and fun to watch, they serve as a reminder that the penny stock world is ruthless and dangerous for amateur investors. So how can you avoid getting ripped off or defrauded by buying into potentially worthless penny stocks and actually make money from it? Well, let me share with you some trading stories and ideas with you on what things to look for and also to avoid. One trading story that I want to share with you is don't focus on the story. Now, there was a time period where I was focusing exclusively on trading penny stocks and actually had some really good success. And I remember the times where I would be in these meetings with the investor relations person or the stock promoters who were basically pitching the company stocks that they represented. So these people were kind of like those people in the movies, and I wasn't really interested in hearing their pitch about, how this company is going to be the next big thing. In fact, many of them were probably lying through their teeth to tell me whatever I wanted to hear. And all I really cared about is the following. What sector is the company in? What's the company's marketing strategy? Is there any upcoming company events or conferences that they'll be attending? Is there going to be any upcoming CEO or management interviews with the press? And what was the stock price that management and insiders got in at? So these are some of the questions you need to ask or know before you buy into penny stocks. Now let's dive deeper into these questions individually. The second idea that I want to share with you is buy stocks in the hot sector. So if a company stock is in the right sector or in currently the hottest sector that investors and Wall Street are raving about, then really it doesn't matter if the company is a crappy company, because the stock price will probably go up. And really the reason is that if a specific sector is loved by investors due to a specific reason, then all stocks in the sector will go up. Now let me give you an example. Bitcoin was super hot in early 2021 when the price reached an all-time high of 65,000 US dollars. So you can probably guarantee that stocks that were associated with Bitcoin or cryptocurrency were also super hot. Here's a chart of Extra Bitcoin, which is a Bitcoin mining company. This stock benefited from the rise in the Bitcoin price. You can see here in early February, it was essentially half a cent. Then it went up 8 times or 800% to as high as 4 cents. So you can see here that the hot sector, which is the Bitcoin or cryptocurrency, led to a lot of stocks in that sector to rise sharply. The third idea that I want to share with you is buy before the pump.
There's no other firm selling this shit. It's all artificial demand. And then as soon as we sell off this position, there's no need to maintain the inflated price anymore. We stop pushing it, and then
it crashes.
This is an example of a pump and dump scheme where insiders will accumulate lots of shares in the stock at a very, very cheap price and then push up the stock price. And then once the price has gone up to a certain price level, then they will start selling their shares for a nice profit. The price will then ultimately fall and investors will be left holding worthless stock. Well, in order to avoid that, you need to ask the right questions and find out the company's marketing strategy. You want to find out what they're doing in terms of, let's just say, buying ads on social media, or putting ads in newspaper, or appearing on TV, or getting featured on any articles or in a magazine, or sending out mass emails. Basically, if a company has a huge marketing budget, then they'll be able to get more people potentially buying into their stock and thus push up the stock price. So what you want to do is find out when they are starting their marketing campaigns and buy before the pump. The fourth idea that I want to share with you is follow the CEO and management team. So what you want to do is try to find out when and where the CEO or the management of the company is speaking at any influential conferences or trade shows, or even their own company events, or having any one-on-one interviews with the media. Now, sometimes companies at these shows want to use the venue to announce like positive news and get lots of free media coverage. Now, even if they don't announce anything at these events or during media interviews, they will most certainly be talking positively about the company and their growth prospects. And some investors, upon hearing this, will buy into the stock. So what you want to do is find out when the management team is speaking publicly and buy before the event day. Before I talk about the next idea, please take a moment to like this video. I would really appreciate your support. Okay, the next idea is follow the money. Now, my concern in buying penny stock hasn't always necessarily been about the company's growth prospects, because it's kind of hard to predict that. Now, what I choose to focus on is to ensure that the price that I'm buying into a penny stock is the same or close to what the company insiders and CEO have bought in at. This way, my risk is greatly reduced because I know that the company insiders will want to make a nice profit from their shares, and hence they have an incentive to really push up the stock price. And most importantly, they won't let the share price go below what they bought them for. So whenever I buy into any private placement of any company stock, meaning that I'm buying the shares privately rather than through the public markets, I always ask the question, what price did the insiders get in at, and what shares or stock option prices did they get issued at? The sixth idea that I want to share with you is sell the pump. Whenever you hear good news about a company and their skyrocketing stock price in the newspaper or in the media, it's too late to buy in because many people had already gotten in at much lower prices. In fact, if you are holding the stock that is all over the media and in the newspaper, then it's time for you to sell, because it's unlikely there's going to be even more positive news about the company. A perfect example is the penny stock Extra Bitcoin, which mines Bitcoin. And when Bitcoin was all over news, when it was $65,000, the insiders in this stock were basically pumping the stock. Essentially, you can see here, it was around half a cent, right, in early 2021, and skyrocketed all the way up to 4 cents. So this was the major pump. So what you should do, you should be selling the pump. And you can see in less than a few months later, basically went all the way back down to half a cent. The last idea that I want to share with you is short the pump. Now, since we all know that a big majority of these penny stocks will probably all fail and fall down in value, you might be thinking to yourself, well, instead of buying them, maybe I should short them, meaning to bet on the downside. Now, it's a very good idea, but a very dangerous strategy, especially if you don't know what you're doing. Now, take a look at all these short sellers in GameStop who lost millions due to the skyrocketing stock price. Now, with shorting penny stocks, you could end up losing more than your capital or wiping your account out when the stock price skyrockets in value. I'll talk more about this in future videos. And lastly, if you plan on playing penny stocks, always play with money that you're willing to lose and also can afford to lose. Be safe out there. Thanks for watching. If you want to watch other videos where I analyze my favorite Wall Street movies, please click on the left for more videos and click on the right for the full playlist. See you in the next video.